Gentlemen, this is Clueless Trading Frank. It's approximately 8:10 p.m. Eastern Standard Time on a nice and beautifully cool evening here out on the waterfront in Jersey City. This is a very, I consider it to be a very critical webinar, delayed from last night when I had some technical issues with the GoToMeeting platform, which actually serves well because tonight I think is far more important than what happened last night. I think we all agree on that. And on that note, full disclosure, this is purely for financial education and not for any solicitation or advice. This session will be recorded, uploaded to the Clueless Trading YouTube channel. Feel free to follow us on that and tell everybody who wants to learn a little bit about the realities of the U.S. financial markets, forecasts, and such. The free webinars are available to anyone out there who has internet access. Second note, please follow us on Instagram for the promotional stuff that I put out there, and just to spread the word a little bit that Clueless Trading exists somewhere in the vortex and what we do. On that note, welcome. So let me just kick off here. Just a couple of broad points here, which I think everyone can agree with. Guys, this is an extremely powerful, extremely difficult at times, but a very powerful uptrending market. This market, whichever way you slice it or dice it, wants to go higher. We repeatedly see that as humans. We get swayed around, we get we get thrown around like a rag doll or whatever it is, and we think, okay, this is it. Now we're gonna fall 300-400 points. I keep on showing the levels. We can drop to this and that, and it just doesn't happen. So I'm the first one to admit that when I woke up, I was monitoring things late last night, and I had taken a nap in the afternoon, so I was up till like I think 3 in the morning, whatever, almost till the European Open. And I'm like, this is not looking good. And I looked at my charts very quickly. I checked that on my iPhone, and I was just like, okay, I know we're going to fall. Maybe we're going to be down like 200, 300, 400 points. But it didn't happen. So I came in with a bearish outlook, for the day. And wham, bang, within the first 10 minutes or 15 minutes, things turned around so fast that my head was swinging in this huge bubble that I live in of 14 screens or whatever it is, 12 screens. And I'm just like, whoa, whoa, whoa. I mean, it took me a minute or two, and I try to be as robotic as possible to see what was going on because it happened so fast. And it's getting faster and faster. And there was no news event that turned around the NASDAQ, primarily the NASDAQ. That's where the action was today. That quickly. It was just a massive buy program that came in and just rocked things up. Things down 4, 5, 6 points. Now I'm kind of used to it because it's really nothing new to me, to be honest with you. And I'm always ready to act on the moment because that's what the markets are. And I don't live in Armageddon, so I don't believe in calamities. I don't think the market is going to fall into a deep hole, even though I think there are corrections along the way, and there are corrections along the way, whether they be intraday corrections or a multi-day correction. And we see that through my charts. So I live in my charts. Now, what does all this do to us? What it does, it frays our nerves, or more so, a lot of your nerves. And it creates emotional vortexes in the middle of the day on a particular stock or the market. And we all, as humans, we get riled up. And there's nothing wrong with that. But I've always said this, and I'll say it again to all of you. Because I respect all of you. Okay? And I mean that. Is don't get that emotional. This is a trading floor in the chat room. And I am engaging with my members on a constant basis. So there will be some back and forth standard, no hard feeling type of moments. That's a trading floor. It's a battleground. So no one should take any comments or anything personally. Period. It's rule number one. Because I have bigger and better things in life to do than insult somebody or make a harsh trading comment. There's a lot of bad things to do in life. But that is a trading floor. So if anybody takes offense sometimes when I basically disagree with something, and I'm a very A+ alpha personality, okay? I'm like Polo, the toy Pomeranian, the survivor of the puppy mill. Well, I'm a survivor of life, okay? In many ways than one. So I come across like that. So if somebody takes it personally, as a person, I apologize to them. But as a trader, I say, who the F gives a hoot? This is a trading floor. And all I'm trying to do for all you people, and I mean that from the bottom of my heart, and I have no reason to even say this, to be honest with you, because I saw some of the back and forth and people getting hurt. Like, I mean, I don't know whether they got hurt, like, you know, that soft, they shouldn't be a trader, to be honest with you. So bottom line is, and I said, you know what, I'm going to make this comment. After all, this is my show. This is my service. So all I'm trying to do, guys, all right, ladies and gentlemen, is I'm trying to help you guys as much as I can. I'm trying to help myself by controlling my own feelings and my thought processes. After all, I'm dealing with real money, just like all of you. Some of you are probably dealing with larger sums of money than I am. I'm sure there are. But I am very robotic. And I don't get phased out by what happens in the market, up, down, sideways. I don't get super excited. You know, guys know that. I tell people to basically take down profits a lot and stuff when everybody's like, you know, losing their heads, because it's a one-way gravy train up, especially if they're set up the day before or at the onset of the day when we get those 300-400 type of days. They calm down, guys. Don't get too crazy. And just the way when markets open down and it looks like all is over, I tell people to calm down, take it easy, stay tactical, look at the charts, take positions as you need, and you get these big blasts, scalp it during the day. Remember, I'm not running your books, you're running your books. The final note that I'll say, very importantly, and this is really important, this is trader psychology, okay? Trader psychology determines your P&L. You guys know that. Is when it comes to small spec stocks, there is no way in the world that anybody can direct you on a on a systematic basis. A lot of the spec stocks, for example, NBEV, all right, one that, you know, I like a lot. A lot of it is gut feeling. I'm looking at the longer term picture, meaning I'm not looking to see what's happening on a 1 hour basis. I'm looking at the daily and the weekly. And I show that as much as I can. But sometimes we go back and forth with members who might be down, who are down on it. I'm down on it. So, and I'm very clear about that, you don't have to make that particular type of spec stock from a position sizing standpoint a big portion of your portfolio. And that's for everybody. And whatever you want to do. I mean, you could have bought that stock when we said and it doubled. You could have sold it pre-market for 120%. I had a bunch of it. I sold a bunch of it. And on those things, you have to react a lot quicker because they move faster. That's why we call it SPEC-OTC, over-the-counter spec stocks. Tilray is 100. It's up like, what is it? It's up like $11, $12 after hours. Okay. And during the day, it was up like $20 from where I showed the charts. But these are not things that I'm going to walk anybody through. And that's why I say for active traders only. And I'm not trading with thousands of shares. And I'll buy 50 here, I'll buy 100 here. Hey, you make 10 points here, 20 points there. I mean, come on, that's money on one trade in 15 minutes. Come on. So just making a strict point here, and that's why I said it with all due respect, is that when it comes to the chat room, I am not going to discuss. And because I don't have thoughts on those things, I just react on those things. I don't react too quick. If I like it, I'll hold it for 6 months. I've done that with a bunch of biotech stocks, and they've gone berserk from PTCT, for example, from 13 to like 50, from 6 to 40, a little bit, or whatever what you guys want to do. I buy the basket. So point is, I'm not going forward, with all due respect, I'm not going to discuss that because it's not worth it. I'm not in the business of discussing emotional trades. I'll put in my comments, but when it comes to spec stocks, it's only on the real-time Twitter feed. I'll put in my comments, I'll show the charts, and those are not the priority stocks that I'm going to highlight. I'll show them. You want it, you take it. You don't want it, dump it. You're in a losing position, sell it. I have my convictions. And in life, you know what they say as a trader, or just in life. The one who wins the most is the winner. I win the most. Do I lose? Absolutely. But do I win more than I lose? Am I calling the market shots like nobody's business? You know, week after week after week, sometimes, you know, sometimes consistently, day after day? Absolutely. So I'm the winner. Somebody wants to take my position? Sure, go ahead and do it. Try doing my job. I don't think many of you will. I mean, they won't want to do that. But I love it. Because I love what I do. And I'm right a lot. Like my good friend Donald says, we win a lot. So that's it. Just want to make that point. All right. On that note, let's start. So today was, again, another pivotal day. It looked like, you know, crash and burn. But at the same time, the pre-market charts are very critical. And this is one of the charts that I'm going to show you first, where we are talking about, where's the pen? Where I kept on repeating from pre-market, because I know where we can fall to. If it breaks, I know we can fall to again. That's why we're going to swing between different screens. I said we're going to come down and test the. Come on, this, yeah. We're going to test the cup breakout. This is a large ascending triangle breakout right here that happened on the 17th or so. That's your ascending triangle. And these are not something you just kid around with. These are billions, if not trillions of dollars, which are finally saying, we are going to go higher. So don't just sit there and go, oh my God, we're down a little bit, you know, we're going to crash and burn. No. I came in short-term bearish today, and look what happened. It was a fantastic day. P&L-wise, beautiful. But I acted on my convictions. And some of you did that. Some of you didn't. Well, you know, everybody has their own learning speed, right? There are some new members who are picking up my style, using their own style, using their own resources that they have, their own skills, and they're just ramping. They're getting it. They're getting it. Some people have been with me for months, and they still don't get it. I try to help as much as possible, but I can only go so far. So let's just stick to the charts. So here we have ascending triangle. We broke out of it. We came back and retested it the first part of September. And then we just went berserk. And then we had this cup, and all of this has been forecasted and alerted to you guys. Like I said, uptrend is intact. And then we broke out. And this breakout here, this candle, I kept on repeating at least 6 times today, that this was a retest of the 920s. It was last Thursday's breakout. And let me clean it out, and the market would come back and retest it. It is standard procedure. Whether or not it was slapping out the extra 200 billion tariffs that went into effect today being the 24th of September, whether it be something else, the market is always going to do what it wants to do. The noise out there will simply be a catalyst for it to get there, up or down, but it will always do what it wants to do. That's why these tactical charts are so critical. So one or the other, China or no China, as Donald says, China. Okay, we were going to retest this cup breakout, and that is exactly what we did. This is not magic. So I was prepared for it. That is exactly what we did. Please look carefully. Look at that. I can't make these things up. There was your cup breakout at this level. Where do we come down to? Boom! There was a hammer reversal right off that breakout, which happened on the 20th of September, last Thursday. Boom, boom. It entered that bear kill zone. And then it fell. And this is S&P, which is more heavily influenced by the Dow Jones Industrial Average. We're going to look at the NQ in a second. So that's what it did. There was nothing to it. And I showed multiple charts on different formats showing you that that's exactly what the market did. And this is the daily. So you cut out a lot of the intraday noise and you see what happened. And this little hammer drove emotional retail traders up the wall. Like, oh my God, the world is falling apart. People are just all frazzled. Their nerves are frazzled. They're getting like all bent out of shape, you know. I'm not saying it's not important. Of course it's important, guys. It could have done this and fallen into this range of 29.18, these be the E-minis, 29.18 and 28.79. This could have happened, and I was prepared for it. Because if it broke that, I put some puts out there, SPY and SPX puts, and try to ride it as much as possible. But given the ferocity of the fact that there are so many short hedge funds out there and short retail traders, I put out one of these charts out on StockTwits today, and I got comments. Nothing wrong with that. This is massive distribution. That's it. It's confirmed. Confirm what? That we are going to bounce off as a hammer, or, you know? And they lost money because they were probably shorting hard like nobody's business, everything in sight. But this didn't happen. The majority out there, even among us who are playing the long side, are always looking behind their back and scared and terrified. You cannot move forward on a mountain path, looking backwards. You fall off a cliff. Or like they say, you can't drive in a car looking at the rear view mirror. That's exactly what the behavioral aspect of the market is. Nobody wants to look forward. All right. So this didn't happen. This tested. End of the story. And there's nothing, there's really nothing to see here. I'm not showing stochastics. I'm just showing you the actual candle patterns. There was nothing wrong whatsoever. Nothing is wrong whatsoever till we break below 28.80 or below this red line here drawn at 28.64. So even if we wake up tomorrow and China says, that's it, Boeing, you're banned. Apple, you're banned. And they go berserk. Because look, I'm a big supporter of Donald, okay, Trump. But just like I said this openly, because I'm a straight up guy. I'm not going to idolize him for everything that he does. I think some of the stuff he does is so borderline asinine, it's not even funny. That's called respect for somebody. When you respect somebody, you don't idolize them like God. So if he's going to be like just one way bent out of shape with China, it's not going to do anybody any good. He says he's doing it great for the U.S. business. Every U.S. business is petitioning to be on the exempt list. So what gives? But he has a strategy. But on the other end, the Chinese are a bunch of idiots. Their markets are getting hurt. They are a very proud race. Asians generally are. Nothing wrong with that. I'm not a racist. Okay? I'm an equal opportunity racist. I'm a New Yorker, right? We just love everybody and we hate everybody. So, and they will never bend. Their feelings have been hurt, just the way some members' feelings get hurt. Okay? So they are not going to come to the table with some real proposals. I'm sure they are under the table, believe me. So they're playing the hardball game. We're playing the hardcore. We're just going to push you against the wall. So, you know, you look like a schmuck game. So obviously it's a kind of a stalemate. But under the surface, they are talking. So, saying all that, if China wake up tomorrow morning, and this is another thing I wanted to mention to you guys, and you guys know this really well. Every morning, every night, well, forget night because I'm not a futures trader, but many of our members use my futures charts as a great roadmap and making some very decent money. Many of them you guys don't see because they don't have time in the chat room. They don't come in the chat room, and doing great. And but for traders during the regular market hours, you know that every morning is a battleground. I don't know where we're going to wake up tomorrow morning. I can guesstimate. I can make some precision forecasts, but I know where we can fall to or where we can rise to, where I'm going to take some nice massive profits shooting fish in a barrel, or where I'm going to be setting up some trades for the day or the following day or for the following hours. So I know that. So is it possible that we wake up here at 2864 down like, 30 basis points S&P handles, down 250 Dow points? Absolutely. Technical analysis gives you a precision roadmap. Please understand simple English. It's a precision roadmap. What does a roadmap do? It tells you what the detours are, where the potholes are, and what you need to do if you get there. And it shows you the final destination. My final destination since 2014, since I started the service, has been dead right, which is higher. And during some times, my final destinations on the pullback have been dead right too. That's what's called a roadmap, guys, okay? A roadmap doesn't say you're going to get there in the next 10 minutes. That's where traders screw up big time. So, saying all that, is it possible that we get down here? Absolutely. And it does this? Absolutely. What did it do today? It did this. This is still a bull flag. This big consolidation that lasted 1, 2, 3, 4, 5 days. Like, oh my God, the world's coming out over. All it did was come back and retest the ascending triangle breakout. I mean, the actual breakout, which was on, 1 second, guys, which was on, I'm dealing with too many screens here. Okay, which was on the 27th of August. It tested the breakout, slipped below that, and decided to just bust a move. We were there. Now, if it broke below that, then we could have been looking at the 2800 level. I'm not showing you the stows and all that stuff. That's on a different chart, which I show constantly. But, I saw how deeply oversold we were, and I used my, my tactical analysis to say, no, we're going to bounce. And we bounced hard. Now we're pulling back, and it looks like it's holding this a cup breakout level. And is it possible it slips down below that? Sure. Sure it can. So waking up every morning is a nervous, exciting game. This is the new normal. This is what we live in. Accept it or just perish. That's it. Bear kill zone, bull kill zone. My gut tells me we're going to enter the bear kill zone to a certain degree. by early October, and then we're going to fall into the bull kill zone by mid-October. That seems to be the standard procedure, and also for many accounting reasons, because it's the end of the fiscal year for the 800-pound gorilla in the business, which is the mutual fund complex. Now, what we are dealing with this week, as I've explained in my previous videos, is the end of the third quarter. Do we honestly believe that after such a super run, our fund managers are going to let their third quarter bonuses completely disappear in thin air because of China, because of who else? Iran lobbing a missile, because there are a bunch of idiots, Iranian mullahs, okay, but missiles in the Hormuz Straits, in the Strait of Hormuz, in the Persian Gulf, the biggest, oil shipping line, and comes, missile lands like close to one of our naval carriers. Markets will be down 300. Do you honestly believe the fund managers are going to say, okay, that's it, we're going to give all our money away because, the Iranians just lobbed a missile towards our warship? No. Markets are going to drop, then they're going to rise with a vengeance. It's just the way it goes. Money talks and shit walks, guys. All right, excuse my French. They're not going to let this quarter go, in my opinion. And if I'm wrong, fine, I'm wrong. At least I have a real opinion based on my charts. So looking at this S&P chart, for example, the 1 hour, which I showed you in the day a couple of times, this is a bull flag consolidation channel. These are the channels. And guess what we did? We touched the bottom end of this channel. Right there. At 10 a.m. today was the 24th. Please look at the time at the bottom. I don't make these things up. At 10 a.m., the S&P decided that it wants to go higher. The real action was in the NQs, the NASDAQ. I showed that repeatedly. But I'm just showing you what the broader S&P did too. Does this really look like the end of the world? Maybe to some of you, but hey, I'll leave that to you guys to have nightmares at night. On that note, let's look to see the simplistic stuff that I follow, because I'm pretty much a very lazy, stupid trader. I look at complex things and I just want it to talk to me in a very simple way. And the simplest way something can talk to you so your mind stays straight and you don't get emotionally distraught and not do anything on massive reversal trades, which Carter Worth today was talking about, cup and handle reversal trade. I just heard it on my Bloomberg radio on my truck, because when I was taking the dogs out earlier. I just smiled. I'm like, we talk about the more advanced stuff ever. But what Carter Worth says obviously carries more weight because he's Carter Worth. And he's a very nice guy, by the way. I met him a couple of times back in the day. So saying all that, the simple thing that a lazy trader needs to look at are the stows. Look at the stows. What are the stows doing? What have the stows done? The stochastics done? I'm not going to keep on repeating this till it becomes a staple in your brains. What have they done? And every time they've done this, what has the market done? Don't make these things up. Just look. Squint and look. This was the time we had lots of volatility. So there was a little pull up, and then boom, down. But then it created a double bottom. And it did this. But generally, when it falls that precipitously, this was a multi-day consolidation. Just at the end of last month, by the way, just so anyone forgets. And so this is what it's doing. Is it possible it does a double dip and the market comes down like that and tests the bottom end of this consolidation channel? Absolutely it can. But at least I know what the markets can do, and so do you guys. And generally speaking, if it does a double dip, you better buy with some pretty, not you better do whatever you guys want, but that's a nice aggressive buying opportunity, as I've explained, if it does a double dip like that. Because that means there's real juice getting picked up. We went off on a massive breakout, right? Since Thursday. And then Friday, we pulled back a bit. Lots of stuff going on, the mechanics, the article, I've mentioned that to you guys last week. with the S&P rebalancing on the new telecommunications fund. Lisa here, our great member, she went ahead and gave us that link. I posted that. Read it. There's a lot of technical stuff going on. I also mentioned very clearly what Netflix would do. Not just technically, but there was a reason behind it, as in money flow. It is now a component of that new telecommunications sector, which includes old line companies like Verizon and new line companies like Netflix. It's not just Verizon, Comcast, T-Mobile, blah, all the, blah, blah companies. You're talking about the real growth companies. Netflix is in there. I bet you Roku's in there. Things which are streaming media. Welcome, time for grandpa to get a new set of clothes. Wear some skinny jeans for a change. I don't know what it is, They came into the modern world. They created a new sector. So obviously there's going to be a lot of reshuffling. Part of the reason Netflix rose like that was because of the fact that the fund manager has to buy it a lot. It's like being added to the S&P 500. So key is that we know what it can do, but in its most simplistic way, I'm showing these things here, or what I look at, because I'm just very dumb and I'm clueless. Really, I'm pretty clueless. Okay, I don't look at level 3s. I don't look at this. I don't see what the market on close is doing. I'm just following my charts, and I think I'm doing pretty okay. I live and breathe my charts and take into account everything else that's going on, all the other information. I'm not saying looking at other information doesn't help. Of course it does. But I only have a limited brain capacity. I have 3 brain cells left. I'd like to use 2 of them to be a real tactical chartist, and the third one to keep my emotions in check. 3, all right? This, to me, is exciting. So even if we dip and slip and slide a little bit here, I believe that this is going to curve higher, which means we are going to fill this gap here, which is around the 2930 level, and possibly overshoot and retest the highs, which was 2940, which, by the way, I said we were going to be at 2940 when we were at 2800. And when I drew these channels, when we were at 2864, I showed you I showed all of you. Do check on my YouTube channel. I said we were going to go to 2920 to 2940. And guess what? That's exactly what we did. That brings me to a very important point. My job is to show you some serious precision roadmaps and give you some parameters how you can get there, i.e. strikes and stuff like that. Your job is to manage your own trades. If I tell you today that we are going to be at S&P 2970 by mid-October, I don't care whether you guys believe it or not. If we get a China deal, we're going to be here in 2 days, if not a day. Not a day, but, yeah, we could be up 600-700 points on the Dow. So if I told, as I've been telling people, this is what the markets are going. My question is, you manage your own trades, whichever way you want to get there. Because I've done this a lot. All right? I've done this a lot. I've shown you the roadmaps, and you don't want to get there because you're scared and you're getting emotional, and you think that a quick 30-point drop in the market and some Apple down $3 is going to overall kill the market, and the next day Apple is up another 4, and the next day it's up another 4, and you're sitting there going, oh boy, I should have bought it. Well, that's your business, not mine, because I'm getting a little bit tired of coddling people, and it's my fault. I do coddle my members, and I'm not going to do that anymore because it's draining me as a person, dealing with the emotional garbage that I have to deal with, sometimes. Seriously, I'm saying that as a nice person. Let me stick to what I do best, which is show charts. So saying all that, everything's okay. And we could slip if things get really hairy. I don't know how much more things can get hairy. I mean, unless China really loses its and they really go nutty, which I think would be so detrimental to their economy and to their markets. Unless we have another blowout in the emerging markets, India is going through some issues because their shadow banking sector, which is the secondary banking sector, the non-official one. I think one of the banks is in default. Those things can be dangerous. Those are the black swans. All right. Aside from that, I like what I see. Now, the bear will say, as I always like to point out, the bullish and the bearish thing. There's your head. Here's your left shoulder. You can call this a right shoulder. There's your neckline. And if you break the neckline, you're looking at 28.92. Call it around 2,900. Is it possible we can drop to 2,900? It's only 20 points from here. Well, it's nothing. That's 100. I mean, it's nothing. Okay, I'm not saying it facetiously. That's 100 to 120 points on the Dow. And we reverse. And we reverse hard, in my opinion. Nothing more to show on that chart. So let's move on. Okay, what's next? What's next is just naked charts, and I wanted to show you the action where it happened. Action time. Action was in techs. I told you guys last week they would buy the techs for the end of the quarter window dressing. That's exactly what they're doing. Remember, if you already own something, why would you need to buy it to show it? You want to buy things that you sold maybe at the highs and then rebuy it back to show that you still owned it at the end of the third quarter. That's exactly what they're doing. So where's the NQ? So here's your NQ chart. Some people might understand it, some people might not. And it's really simple, guys. This was the beginning of the year, 2018. Let me walk people through this, because this is so important, because we play a lot in the sandbox of 15 to 20 point movers, 3 to 7 point movers, the Apples, the Netflixes, the Facebooks, the Bookings, the Googles of the world, the Nvidias, the sexy stocks, right? The big beta movers. This is the sandbox that they live in. It's called the NASDAQ NQ or NASDAQ NDX. This is the NQ futures. These are the actors behind the scenes. I drew this chart a while ago. I couldn't be as simple as possible. I called it pattern symmetry. Every time that the NASDAQ has pulled back, not the massive crash level pullbacks till April, which were generated by massive vol trades, volatility, bust out trades. I'm talking about the standard paradigm that started in April. Some people might say, why is he explaining this? It's so obvious. You'd be surprised to how it's not obvious to so many people. So what I did was I just looked at pattern symmetry. These shaded boxes are when you had those big sell-offs. Apple down 7, 8, 9, Google down 20, 30, from whatever level they were at back in April. 1, 2, 3, 4. 4 candles. Bang, bang, bang. Force margin sellout, CNBC, like the end of the tech sector, they're all slowing down, blah, blah, blah. Which reminds me, I was a little bit worried today about the technology sector too, because the Trump team, through the Justice Department, they're drafting a plan to attack our finest tech companies on antitrust concerns. That's a political move. They're pissed off by the liberal bias in some of these tech companies. So what? It's California, for God's sakes. But you don't mess around by threatening them with antitrust. You kill the golden goose that made America great. Good luck, guys. So obviously I was like, like I said, dumb and dumber. I said in some of my comments. It's just my comments. That's so stupid. And if they ever do that, first of all, the sector is going to collapse for a while, and then Wall Street's going to say, and the real money's going to say, F you, we're going to buy the crap out of these stocks. Antitrust. What antitrust? Just the way they tried to go after Microsoft and destroy it back in the 80s? There was a monopoly? Anytime you get big, you're a monopoly. If you're a hotshot trader, you're a monopoly. If your charts are working like magic, you're a monopoly. It's called freedom of choice. You don't like Google? Go find yourself in Bing searching something or somewhere else. Or lookup.com or some other crap out there. So when I looked at that stuff, and there's rumors flying around, I'm just saying, will the market really take it that well? Doesn't matter. U.S. business always wins. U.S. politicians come and go. I don't care who it is. That's the way I look at it. So look at this pattern symmetry. You don't even have to count the bars. It's so obvious what the pattern symmetry is. Were the reasons very different here, than here, than here, than here? No. The market climbs a wall of worry. There's always going to be something. Antitrust fears, Trump going on Amazon, then he picks on Facebook, then he picks on Google. He's going to pick on Booking because, he didn't get a seat on, like whatever. I think that's one of the stupidest things that he does, and I've said that very clearly. Just stop doing that. Stop attacking our finest companies, the companies that make America truly great, not the politics. The companies that make America truly great. Anyway, you know my feelings about that. So bottom line is, no. And look what it's doing. It falls, it rises. Falls a little bit, rises. But these are the main pattern symmetry that I detected. And I showed you guys this weeks ago. Since July, I started showing you this. July and August. So this gives me a clue on the bigger picture. The bigger picture is telling me, and anything can happen, but I got to go with past pattern symmetry, that the NASDAQ wants to go and retest the upper end of this rising wedge, which means it's a new all-time high. That means these stocks are going to try to attempt to get back to their all-time highs and bust a move. I personally think Netflix is going past 400. So my feeling. Show you the chart in a minute. Shown you that many times. I think Apple's going to go back and test that 225, 230 level. Remember, Apple is not a huge growth stock. Apple is a value stock with a very fat dividend. That's the reason the old man Buffett loves it so much. You think he buys Apple for growth? He buys Apple for a fat dividend and nice growth. You want growth? You buy Netflix. You want real growth? You buy some of the other players like Square and Roku. You want growth from like beaten down distressed rate? Buy Facebook. Come on, guys. Don't forget. Dumb as I am, I was really good at what I did on Wall Street, all right? Trust me. I can beat you guys any day in a punch in fundamental analysis. Any day. So, Amazon. You heard the news last week, right? Some analyst was pushing them. And I said this a while ago. Separate your businesses. Unlock value. AWS. Their retail business. Then their logistics business. Their space business, which is Blue Origin. Do you know how much value it would unlock? Just by spinning off AWS as a separate company, Amazon would be up $500 in minutes. All right? It's called financial engineering the right way. Because right now, everything's looked on. It's like, it's like looked on as one big thing. How about breaking them up a little bit? You think they're not looking at that? Of course they've had plans to do that. What if they split the stock? So I don't give a hoot whether somebody loves or hates Washington Post and what they write or not. I'm talking about companies that make America great. Wake up. So all-time high? Yeah, I think it's coming. In the meantime, is it possible that it can do this type of detour? Absolutely. I'm prepared for it. Do I want it if I'm long? Nope. Do I think it's going to do this like real fast? Nope. But look at the stows. This is what I live and breathe. Keep it simple. Keep it simple, stupid, right? The KISS principle. Look at the stows. So what was it doing? And all this shenanigans, with the balancing and the S&P new sector and blah, blah, blah. If you want to look at the bigger picture of what the techs and the biotechs, but primarily techs, I use the NASDAQ 100 futures primarily to figure out the overall market conditions for techs. you have a ascending triangle. That's MB's favorite thing. By the way, I got to give MB a big shout out. I just remember one of our webinars, what was it, last week or so? I showed them, she was, that's an ascending triangle. I remember saying, I'm not that bullish, but it certainly looks like one. MB, get the trophy. You're right. We were in a major ascending triangle, and we broke out of it like a monkey gone wild. Or whatever. So congratulations on that call. Because you did see that when I asked people on the S&P, on the ES, what it was. You said, it looks like an ascending triangle. And I'm always a little bit cautious. So I was like, yeah, it looks like it, but, it's going to get there. But boy, it got there in 2 days. Hats off. Trying to, bear with me 1 second. This thing does this. Which screen am I on? Bear with me. I'm losing a particular. When you have multiple screens, sometimes. Oops. Bear with me. Hi, let me continue with this. All right. So bottom line is this still looks pretty good to me. And if we follow these patterns, it's a little sway back and forth, but it gets up there and creates a high. This tells us that it is continuing to move higher. These toes, like I said, keep it the KISS principle, and it looks like it wants to get up there in that zone, and it gets up here, then it resets. So that means it's going to retest the highs and reset. In the meantime, you can make a ton of money trading these stocks intraday, holding them for a couple of days swing, not getting married to them. And you make yourself a beautiful amount of money. Let me show you Netflix now, on the heels of showing you the NQs. So this is going to happen. And this, again, somebody says, what exactly is going to happen? What I look like, God. I would say that it happened sometime by mid-October or after the first week of October. So saying all that, let's switch screens here and look at monitor number 3, Netflix. Am I in love with Netflix? I'm in love with no stocks. All right? I'm in love with tactical profits. That's what I'm in love with. So this stock, we have consistently traded it. How much more simpler can it get? Each of these candles are worth serious money. Then you get a quick short-term pullback. Then you get to the upper end of the range where the markers are. And this is what I'm saying. How much easier can I make this? Sometimes it pulls back like it did here a few times. This is called range trading. I like trading ranges. Don't you love trading ranges? If you don't, then you better start liking trading ranges. And this range was good for 355 to 338. 17 points. Can't beat that. If you don't get excited by 17 points, I don't know what excites you. So we kept on doing that. And again, I'm not making it like, look, it's a walk in the park. You buy the options, boom, they're down like 20%. I'm showing you the overall swing trades we have done consistently with the 80 to 90% hit ratio, making anywhere from 120 to 140% of your money just in this range. So finally, the range. Remember, more a range gets hit on the upper end, the more likely, like Carter Worth, using his own words today, said, the supply gets diminished. In other words, the sellers who bought here or bought here, every time it hit here, what did they do? What did they do, guys? Every time it hit here, what did they do? The buyers who bought here in this range, every time it hit the upper end of this range, what did they do? Most of you included. That's what you guys do. Every time you get even, you say, I'm selling, I got my money back. Okay, great. Exciting. Boom, it dropped. Oh, I'm a genius because I got my money back. Then it does this again, and you don't buy it, so you lose out this whole point. That's the way you lost out on this because you bought here. So you're missing out on making 120, 140% on these moves up, but you're very happy because you got your money back. Hey, that's human reaction. That's why we call it resistance. So got my money back. I'm out. Fine. Don't buy the lows, the bottom of the ranges. We do. And boom, finally it hits here. So as a lot of the of traders basically say, I'm getting my money back. They got their money back here. The next one said, oh my God, why didn't I sell here? Look at it now. I'm going to just pray. And they got down on their knees and prayed, and God answered their prayers. They got their money back. Even, or maybe slightly down because they bought around here. Does everyone understand what I'm talking about? Because this happens to all of you all the time. Does everyone understand what I'm talking about? Yes or no? Yes or no? Do you guys understand what I'm talking about, or am I just speaking Swahili and nobody gets it?
Yep, got it.
Okay, so listen, I haven't finished. So bottom line is, so you don't do it, and every time that it's moving and hitting those levels, there are lesser and lesser amount of traders to sell stock because they've already sold here. They sold here, like, oh my God, I got my money back scenario, right? So, and then they sold here. There's no one really left to sell here. So guess what happens? You get a breakout because there is no real supply here. Why do you think there was resistance here? Because there were always a certain amount of supply or stock shares to sell at these levels. That's why it's called a resistance. By this time, there's really not that much stock to sell. The supply is low. Boom, you break out. And boom, we're in there. We sold here too, but we left some based on what I was seeing here on the stoves, which was still climbing. Based on other indicators that I look at, told you guys to keep some. And then as it broke out of this range, I said, buy, buy, buy. I don't care whether it's 9:35 a.m. I don't care if it's 10 a.m. I said, buy, buy, buy. And guess what happened on the 12th? Bang! The stock went up a gazillion points, like $20. Of course, there was news because the market is manipulated. You think news is just sent, released, right? News is manipulated. They tend to put out good news right when there is something good happening. Or they will sell bad news when something bad is happening. Shorts always like putting out bad news when something bad is happening or the stocks are down. And everyone just goes, oh my God, that's it. Bang, it goes higher. Everyone gets super excited. Few of you buy. Some of you buy the tops. In the meantime, we're selling nice because we know what the ranges are. These two blue lines are the ranges. I have a marker here says, caution, time to take some nice profits. And boom, Netflix basically crashes down. Do we expect these type of crashes that quickly? No. But this went off for 3 days. This was the big tech move down. What does it do? It comes to the bottom end of the range. This is the range. Look where the stows are. Buy time. Boom. All happening within 24 to 48 hours. Remember my famous term. You're going to see a major reflex bounce or rally within 24 to 48 hours. You think I just sit there and make these things up? No, because I am immersed in my charts, and the reason I trust them so much, the way I structured them, because they work, and they have worked so well in all types of market conditions. And now more so, despite the volatility that hits us here and there, because of the fact that the markets are completely controlled by machines. So the charts are far more accurate. Yes, they'll take detours. Friday, boom. This is today. Opens up here. What does it do? How much easier can it get? I'm like showing you, so we're past this range here. 1 second. We're past this range here. Let me move the chart out here. Just this one. If you don't want to just trade one stock, trade stocks like this. So here's your range. I showed it. It fell below that, and then it created one of the biggest monster reversals. Look at that candle. You don't need to ask yourself anything. You need to just yours, like Alfred E. Tennyson, the famous what was it? The famous poem about the Crimean War. Yours is not to question why, but to do and die. Yours is not to question why, but to buy. Okay? So this is what you do. And within seconds, you see something going, the calls, the 367s go from $1.85 to $9.95. Gentlemen, ladies, that's 400% in a matter of 2 hours. And you think some members want to slam me because of a SPEC stock? Please, help me, God. Seriously, guys, all right? So this is what happens. Then it pulled up, and it's still good. And now, this is what I'm looking at. Short-term stows got overbought. I pulled back a little bit. And and the slow stows, those are the fast stows, looks like at face value, it wants to move sideways. This is all about recognizing patterns. Okay, looks like it's like a little Cobra's head. Looks like it wants to move sideways. Can Netflix slip and retest the pivots from today, 364? Sure it can. But I still think it gets to the upper end of the range, which is 377. Didn't quite get there. And it gets to the upper end of, and this is just one chart I'm showing you. This is the ultimate trading chart. Is upper end here at 386, which I've shown repeatedly on the other charts as what? What is 386 to 395? What is that? Can anyone remember? What is 386 to 390 or so, 395 on Netflix, on multiple charts that I've shown, on the swing charts? What is that level?
Gap.
Thank you. Thank you, Milan. Gap. Nobody else is doing that. Because you know why? Because nobody else is making money on Netflix. Because nobody else is really focusing on the charts. And then some members get insulted because I was direct on them on a SPEC stock. God forgive me for my sins. Seriously, guys. So, SPEC stocks, by the way, which I made a ton of money on, and they went down a little bit. And now, after hours, they're up a gazillion percent. Seriously. This is when I get annoyed, guys. In a nice way. I'm smiling. And the person I'm talking to knows exactly what I'm talking to. Remember, this is my show. And I'm the one making a lot of money for a lot of people. So please, keep your soft feelings to yourself. So Netflix, there we go. NQ, we covered. So let me show you a much more exciting chart. Let me get there. Oh, I am on screen number 6. So this is what the wild part about the algo business is. This is Warden 2000. I use it. You guys can, or TC 2000, Warden. And I'll tell you guys, this is known as a hollow candle reversal. This is Netflix at 9:45 a.m., right? You see that on the bar? You get a hollow candle reversal. You just say, God, the shorts are like, that's it. Oh my God, I can't believe this is happening. They are losing billions of dollars or millions of dollars every 15 minutes. Okay? This is a hollow candle reversal. And that hollow candle reversal has to be severely respected. Severe. You don't see them too often. My interpretation of a hollow candle reversal is basically a massive reversal where shorts are cremated, impaled, and the long guys are just coming in hard. And you can see here, it's like a flying wing, but more importantly, the candle, the red candle is hollow. Look what happens to the MACD. Goes from deep red to severe green within a matter of 15, 20 minutes. Sorry, this is Facebook. What am I saying? Sorry, my apologies. I'll show you Netflix in a second. Oh, there's Netflix. It has a massive hammer reversal. So when Facebook goes like this, you just want to be a buyer. The stock is now, and I'm showing you short term, 15 minutes. This move alone on Facebook, from an option standpoint, because that's really what we're dealing with. Let's say you want to look at the cheapest of the lottos, let's say the 170s. They go from 10 cents to 43 cents. That's 300% in profits and a four-bagger. And they opened at 26 cents. They went down to 10 cents on the collapse. So this is really important because this is one of the premier stocks, right? And on the tech side, FANGs, and you just you know that something big is going on. I don't need to tell you that. Let me show you the next one. Let's show you Apple. So this is the 15-minute. You look at the hourly. See this, the Warden's excellent. You can do this on Thinkorswim too. It's so easy on the eye. Can everyone see this, by the way? I hope I switched to the right screen. Yes? Milan, you can see it? Mary? Anyone there?
Yep.
Oh,
Got
okay.
it.
Yes. Okay, good. I just want to make sure I wasn't on the wrong screen, like going over this stuff. So, so here you are on the 1 hour, and look at the daily. Now, to me, that's exciting. Now, I've shown you this charts in much more beautiful way than this simple candlestick trading charts right there. Okay. So I know how the candles are reacting. I'm not saying that the candles are going to go hit. Everything is a pivot point right there, 167. So if somebody wants to trade this from 159 from a couple of days ago, this is a daily chart, to 167, you could have done that in 2 days. Look, I'm not taking anything at face value. I'm not saying the stock is going to go to 190. There's a massive gap here. Massive, right? We know that. This is a monster gap. It's going to cover. It's going to fill this gap. No question about it. It's going to do it. It's going to do it, and it's going to do it on the ramp up towards the new all-time highs on the NASDAQ. But in the meantime, this is what I share with you guys, and this is how I look at it. There are multiple gaps. And these gaps are worth a lot of money because Facebook calls us so cheap. And look at the internals on the MACDs, looking great. All the moving averages, you know, it's fine. You can trade them for 6, 7, 8 points on a consistent basis, or intraday for 2, 3, 4 points. But this was extremely positive. Now, what would be really positive if it breaks over 167.2? Then it's got a nice move to the next inverted hammer, which is 170, 134. There. Will it fill the gap right away? Unless it's a big NASDAQ day, I don't think so. Or some sort of massive announcement out of that Instagram has reached 3 billion people. Because Instagram is the fastest growing part of the business. God knows. Or their dating app is like breeding Tinder. You know, they're doing all that stuff. Yeah, sure can. So this is okay. This is a distressed reversal play. Now, let's take a look at Apple. My other charts on Apple are very clean. Let's show you the ones. It's right there on the Twitter feed. Feel free to go take a look at it. This is the trading chart. That's a trading chart too, but this I can trade every candle if I want to. Remember, I'm not a rabid, wild monkey on a hot tin roof day trader. I'm not trading for like 30 cents on an option, like to make 10, 20%. I'm looking to set up the trade so when this thing breaks like this, Apple calls today, the 222.5 that I told people to buy on Friday at around $1. They opened at 70 cents. Then they went to 64 cents. The high of the day was 158. Ladies and gentlemen, that's 120% on your money. Even if you didn't catch the 64 cents, let's call you caught 70 cents. You could have sold them at $1.30, $1.40. That's a double on your money on Apple. And that's a good looking chart. It's a bull flag finish. It's a bull flag finish. This was the one that I had drawn. And this was at 4 p.m. at the close. And this is what it's doing right now. Is it possible something happens overnight and it opens down here? Sure. But at least I know what it is. This was the bull flag, broke out at 3:45 p.m. Great. And the more you look at these things, the more easier you understand the pattern. Let's take a look at Netflix. Well, shorts better be praying to the altar of whatever they're praying at. Look at that hammer from 354. Now, this is a different look. This is a different platform. So I'm staring at the same chart that I showed you on quad, the algo HFT chart, this one. Let me bring it in, drag it from my other screen. But look how different it looks. Look at that. This is the same thing. Same thing, right? There you go. Beauty. Here I'm looking at a bunch of stuff. Here I'm just using the Warden Stows because I use a lot of different indicators, and you can see what's going on. Where's the thing? Hold on. Quad. Okay, there we go. So, bottom line is that it's if you have the right visuals, you can trade off tremendously of these things. Look at that. Then it created a bull flag. Then there was a sell program that came in at 2:15 p.m. So let's say you got up here and you started to see the candle develop. I do that. So you take down some profit. So you take down the position. Nobody's holding you to it because those options went up from $1.55. The Netflix was 367.5, went from $1.85 at the lows to $9.95, almost $10. And they closed at $7.30. Yeah, at $7.30 on this pullback. But I'm bullish on Netflix, so I'm holding it. I took down a little bit at around $9.95, but I held most of the position. Then I saw these three candles come in, sell-off program. I saw it on my other chart, which is the quad chart. There was no real material damage. There was no material damage based on the Stows on this three-point sell-off. I mean, like a 3-point sell-off, right? Nothing changed here. Nothing. There was some basic profit taking, but nothing changed on the slow Stows. So I said, okay, sounds good. Otherwise, I've taken down the whole position. Now, it's up to you. What do you want to do? I just gave you a 400% mover in the intraday. Whatever you want to do, you want to do. You might want to start off by kissing the charts first. Seriously. So that's Warden for you, okay? Let me show you. Let me show you guys. What was that one that I want to show you? I'm going to drag it in here. Now, another thing that I look at all the time is the VIX, right? So my charts on the VIX are extremely accurate. In a bull market type of scenario, I do not play the VIX that much, even though I will have sometimes, as you know, sometimes I'll have it, sometimes I'll tell you guys to have it, which is VIX calls, right? So bottom line is the VIX, there was your gap from here. That gap has been filled a couple of times, but I leave it in there. I just take some, I use my own brand of reusing a particular level. So it hit that exactly. Guys, you can make this stuff up, okay? It hit that exactly. While a lot of people were freaking out, and then it started to turn. The slow Stow started to turn. That's telling you that it's going to come down towards the lows, probably down here, before it attempts another bounce again. And what's down here? It's the lower gap, where it broke out of this morning. But it's still within the downtrend channel. If the market wants to retest a new high towards the 2950, 2960 level, the VIX will print a new low of around this marker here. That's why I put it there, around 10. What was the low on the VIX for the year? Let me see here. 856. It doesn't even show up on this chart. So is it possible? You see the downtrend channel. I mean, it's pretty obvious. There's your downtrend channel. So the VIX can go as low as 880, back towards the lows of the year. So I keep an eye on this all the time, and I make a determination. And by the time this is doing this, your the S&Ps are going the other way. And that's it. I lost one of the charts. Bear with me 1 second. Oh, let me show you one other thing here, which might not make any sense to you guys at this point. This is your this is a much tougher read. This is a directional bias chart. Generally speaking, look at this. This is still a minor bull flag. This is still a minor bull flag, even though the world freaked out this morning. Right there. There. Okay, that's still a bull flag. This was a multi-day pullback. That was still a consolidation flag. This is a minor one. Notice how the MACDs went green. When MACDs go green like that, they tend to go up for another couple of days, which brings us into the end of the third quarter. Bingo. If MACDs go like this, accelerating, then you will see the market just go berserk. Berserk. 300-400 points in a matter of a day or two. So I watched this very carefully. This is coming down. That means there's maybe a little bit more downside left. That means that we could very well fill that gap. Another 50 to 100 points on some sort of BS news coming out of, China or wherever, or Trump gone nuts in the morning, swearing at the Chinese premier, things like that. So the markets could fall a little bit. So generally speaking, it comes down here on the 30s, it bounces. So this is not something that you guys need to be really worried about. I monitor it, just wanted to show it to you a little bit. And that's basically it. So, all right, guys. So this is a sample of a lot of the stuff that I'm looking at, some of the stuff that I'm looking at. Let me show you what I can show you. I'm going to show you two of the... So I want to bring this in. I recommend to everybody, and I've said this repeatedly, that use Quad. Do their free trial. I have nothing to do with it. I've been using it for God knows 14 years now, since my Wall Street days, and it's brilliant. It's just amazing. And if you like it, they have a very discounted rate because a whole bunch of my members use it, and I pay more than $300-400 a month because I get the whole version. They have the similar type of thing at a very discounted rate, whatever it is. I think it's $120 or whatever, but it's pretty serious stuff. So I am going to show it to you guys. Like, you don't even need to draw much of the lines. Look at the SPX. If it cooperates with me, it's not cooperating. So people who are pretty serious traders should certainly use that. I have the whole how to set it up, how to read these things on the YouTube channel. So feel free to use that. And that's it. So guys, that's it for now. I don't want to, keep on going over, put on too much stuff. But at this point, the markets look pretty good. And as I showed you on the, let me bring this in. Just going to show you the wide picture, like I did with the retest of the E-minis daily, just retesting the cup breakout. It signed me out again. Sorry, 1 second. It's the joy of working on multiple screens. It signed me out. Okay, great. One second, I'm just trying to sign in on the other side. I just want to show you one other picture, even though it's on the Twitter feed. That's the daily SPX. Very important to keep that in mind. Oh, come on. Guess it won't let me do it. All right, guys, you can find it on. I found it. Bear with me. Why is it like this? We haven't seen this lately. So this is 2018 where it began. Come on, baby. It's starting to, the full stochastic is starting to curl down. This is where we are right now. I've shown this chart quite a few times. This is exactly where 2018 started. That's why I have 2018 with an arrow, just in case somebody doesn't understand that. Here is where we broke out. So far, I do apologize. This is really annoying. Okay, now it's not annoying. I'll try to make it less annoying. Okay, guys, so here's your Y channels, and we are still within the channel, and that's all I need to know. That's all I need to know for now. So we are still within this channel, and we hit the upper end of this one, and bottom line is that if we do get some sort of real positive news flow out of China, then we are going to hit the 2,900 level on the S&P 500 in a matter of days. So this is where we are right now. You can see that. Watch. Right there. Nothing in here is telling me of any imminent breakdown. Where you want to be a swing short on the market is when you break below the 2,900 level or 2,898, because at that point you got a major support here at 2,980, but it's very likely that we're going to come back and test down. So you're talking a couple of 100 points down if we break this. But so far, I just want to show it to you guys. There is nothing in here that tells me that we are going in for a massive collapse. So that's just a broader picture. Any quick questions I can answer before we sign off?
Micron?
Micron, yeah, sure. Micron was very... Micron, I had some shares. I sold it after hours. Some of you do that too. And where's my Micron? And that night, it was just crazy. It was all the way up to 49, and then it just started selling. But that's just the way it is. That's what markets do. I'm trying to find the... I have the Micron chart on the real-time feed. Let me try to pull it out here, because I do want to show that. These screens are getting sticky at the end of the night, because they're just like, hey, we're showing too much stuff. Let me bring it in. By the way, who asked for Micron? Who was it?
It's a Milan.
Milan?
Yep.
All right. Milan, is that you?
That's correct.
All right, boss. All right. So here's Micron's chart. Looks pretty damn good to me. So here was Micron on after hours. Okay, after hours the stock went here. I was like, hey, great. So I had I had some shares. I always like to buy some shares on this type of thing, you know, less than the $100, you know, type of things. I had a bunch of shares. Boom. This was your move after hours. Look at that candle. Straight up to my level. Straight up where it was going to enter that complete bear kill zone. These blue lines here. It hit exactly there. That's what the marker is. $49. I'm like, whoopee. So I sold a bunch around between 48 and 49. I see this candle develop. And it's like, okay. And this is complete manipulation. They ran this up before the conference call began. Then the stock started selling. The stock started selling. It started collapsing. Boom. So this was the collapse at 5 p.m. See that? So I'm watching this and I'm like, great. But I know where it can fall to. It could fall to 41 or it could fall to down to a low of 40.50. Don't forget that before the Micron call, I said I would be a very aggressive buyer of the stock and the calls if it went towards the 40 level. Well, it didn't go towards the 40 level. It hit this marker here, which was this cup breakout, this kind of this breakout back on the 13th, and that was 42. And this was at 6 p.m. At 6 p.m., I saw the first candle develop right there, guys. Please focus. First candle develop at 6. What time does after hours trading end? Quick.
6.
No, 8. Wake up. 8. You can trade till 8 p.m. So I bought some shares right down here. I still had my calls, which I knew were going to like be obliterated, but I made some decent money on my on a few shares that I had, selling it all the way up here. I see the first candle develop right here. Look at that. Right off this level, 42.33. And Micron went from 42 to 45. The calls exploded the next morning. Micron pulled back Friday with the text, and Micron did this today. This, ladies and gentlemen, is what? You guys should know this by now. Is what? What pattern is this? Come on, guys. I'm tired. You guys are tired. Somebody please answer, for God's sake. What pattern is this? Thank you, Mary, for taking me out of my misery. It's been a long day. Yes, it's a cup and handle. And by now, if you guys don't know what a cup and handle is, for God's sakes, do something about yourself. It's like putting a kid in class and he's in 5th grade but can't count or understand a geometric pattern. If you don't know that, you're in deep, deep, deep trouble. And you're going to get very emotional like some people. Yes, it's a cup and handle. Thank you, Mary. So it's a cup and handle. So to me, it looks like a cup and handle. This is fine. Fast stochastics a little bit oversold on this minor pullback. And I do believe that the stock gravitates up to 47.20. Micron is in heavy buyback mode. Micron is the cheapest chip stock out there. Micron CEO was on, the very smart Indian gentleman. He basically said they don't have any real issues. They're worried about the tariffs and stuff that crimped some of their margin. And the China thing is going to get resolved one way or the other. They're outsourcing a lot of their testing facilities to places outside China. And I like the stock. Is it my favorite stock? No. Do I think it's got up money to be made? Yes. This is not a high beta stock. This is a New York Stock Exchange chip company. So, as in pattern, I like. Will it get up here? Very high probability. Will it get up here? I don't know yet. But if we get these big time NASDAQ moves, it will get up to 49.85 and retest that after hours highs. And it's going to happen rather quickly. And the calls are so dirt cheap, just buy it. When we deal with lottos, you can afford to buy a lot. That's the way I look at it. That's the way it works out most of the time. All right, guys. Could I chart AMD? Not right now, because I don't have AMD charted. So I will put that out tomorrow, Mary, because AMD's chart is really, really I'm sure.